those addressing the board be cognizant that this is an open meeting and is available to all age groups, and as such, ask that you consider who the audience members are this evening and keep comments age appropriate.
Still want to speak? We're all over now.
Yeah, you still want to speak after that?
Well, good evening. I'm Bruce Gardner, and I am representing the Wheatland Township Precinct number 20 voters this evening. I'm the second term elected committeeman. Comments this evening will stem based on the facilities assessment from the last meeting. Based on that, it looks like it's a major financial challenge for the school board. It's about a $20 million plus opportunity, so we wish you luck and hope that you move forward on it and with good due diligence. 3 points I'd like to point for the voters this evening. One, based on history, we do want you to know that there will be increased scrutiny as to any expenditures or increases in revenue and or expenses. Why? It's going to be because of property taxes. I've got a one-page handout here that you can read at your leisure that will express, it's an example of 5 line items on the current tax bill that goes back 3 years. Reason being, this is about an average example of the precinct I represent. It's a $14,491 tax bill for this year. What is not pointed out on there is that since 2009, the levy has increased at a rate, it's over 12.5%. The actual annual fee that we pay is over 10% increase. Unfortunately, the assessed values have declined in the 16% area. So you can see that equation puts concerns. Now, these are just 5 line items, so be aware that we will scrutinize all of those because they represent 93% of the tax line item. The school district obviously is 72% of that, the number 1 item. So that's a point we want to make. The second point is the last meeting talked a brief discussion about the potential restructure of the debt. As a point of reference, April 2013, the DuPage County Clerk showed that 204 gross debt was at then at $292 million. That's the second highest debt on the line item shown. As a point of reference, 203 is at $37.7 million. I don't know all the details of that or why, but the main point is we believe a restructure adding $20 million to the debt, though the rate restructure and the extended time period potentially could not cause a taxpayer raise. We believe this could be perceived as kicking the can down the road and or raising the credit card limit when we should be dealing with that. So we ask that be addressed now. And the last point is, how do we address it? We're recommending that you really request a very comprehensive cost review, line item by line item. The goal should be no debt, no increased debt, and no increased tax revenue. How? Go back to the priorities that you listed and stated your last meeting, align with the EMG consulting groups, some of theirs, and really look at the cost analysis by building, by element. And we think we don't have a revenue challenge, we have a spending challenge. So we ask for your support considering that. And we are open to any cross communication with my group. Thank you very much.
Thanks. Jay Strang, if you want to talk to Mr. Gardner, get his information, and maybe the two of you so you can share some information.